Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this technical analysis of the stock market video, I'm going to look at yesterday's market action and for the week, and why Monday may not be a very pretty picture. So stay tuned. All right, so let's look at the S&P 500 here. You could see that it was down almost 23 points on Friday, following the 30 points on Thursday. It's basically confirming my Elliott wave count that I've had in place all year. And that is with the peak back here on May 20th. We had a truncated fifth wave here that then completed minor wave 1 down. And then we've had this pullback wave 2. And it's valid, it's legitimate that it can be pulled back all the way to the beginning of wave 1. And it's fine as long as it doesn't go beyond the beginning of wave 1, and it hasn't done that. Now it's turned back down. And really the resistance of all of this trading in this congested zone up here was really expected to come into play. I thought it might come into play, a little earlier down near the lows in here, but it pushed up a little bit higher and now has turned down. Now, the thing that I'm really looking at, let's look at the weekly chart. Look at how strong this has come down. And this is the biggest weekly drop that we've had in the last 12 weeks. So you look back over here, yes, it was bigger than this week here because this was what closed 988 actually. So it was like 67 points, but we dropped 76 points this week. And so we're closing almost on the low because the low was 2022, closed at literally 1.02 points off the low. Very similar to what happened on August 21st, this big down week right here. And what happened the next week? On Monday, the 24th, we had this huge downdraft that happened. So, just really, really looks, it's definitely setting up. There's no guarantee, but it's definitely setting up with this kind of negativity and closing practically on its low for the day and for the week. It's just setting up to for money to be fairly negative. Now, we have come down a ways already. Let's take a look at the high-low. Here's the net new 52-week new highs and new lows, minus 204 for the day. But notice that we're not even as low on that sell-off here as we were back in June or here in July. And of course, the August 24th got pretty negative, minus 1285. And this was the end of September sell-off. So we've got plenty of room in terms of getting really, really negative on the net high-low picture. Let's take a look at the VIX. The other thing that's happening here with the VIX is this congestion, this declining wedge pattern. We have this point, this point, this point, and this point here. We were continuing to push down a little bit in here. It was not being confirmed by the RSI and the VIX, and then it just rounded. Look at this nice rounding that's occurring. Moving averages are crossing. I've got the 10 EMA crossing above the 21 SMA, simple. And now it's breaking out of this congested pattern and moving. And notice how this is broken up here very nicely on the RSI. This looks like it is just getting ready to go. Now, no guarantees, but it sure looks like it is. All right, the next one we want to take a look at is the short-term trading index. I meant to look at that first, actually. Here it is. All right, so we closed at 1.27. Now, I haven't shown this, I don't believe, in a while. And, I got this really low reading back on October 8th of 0.85. I really did not expect it to take so long to be a leading indicator of this thing because it has been very good at leading, for previous tops in here. But so it occurred on October 8th. Let's go back and look at the S&P 500 on a daily basis. And where is October 8th? Let me give a crosshair so I can get this. Here's October 8th right here. So we really have, it kind of it was kind of an advance warning that something was happening, but this continued to push a lot further, a lot longer than I thought it would. So about 1, 2, 3, 3.5 to 4 weeks ahead of the turn that's occurring right up here. But now we've got what we've got, and we got this reading on Thursday above 2, but we didn't get a following reading on Friday. Now, a lot of times what I'm looking for is if I get 2 out of 3 days with readings above 2, a lot of times that's an indication that it's a short-term turn or short-term bottom kind of thing. So that's what I'm watching for right now. Right now we got 1 out of 2 days. All right, let's take a look at the high yield. This is the high yield bond fund. This has really been leading this thing down. This is a weekly view. Look how negative this is. But on a bigger picture, but pan out of this, we are definitely putting in a large topping pattern right here of this move. It broke this trend line coming off of 2009, and now it's just rolling over. I really do believe that we've got a head and shoulders top in here. That projects all the way down here to 77. And the thing that's really interesting about the high yield bond fund is it has really been indicating the market has been weak for a long, long time. Okay, so here's October 14. Okay, that was a bottom that not all the indices have taken out at this point. The New York Composite has taken it out. But look how the high yield bond fund broke that in December, and then has broken both those lows with the thrust down that we had in August, and then the August low was taken out here on the week ending October 2nd. Well, that August low hasn't been taken out by the stock indices yet, and then now just look how this just keeps rolling. It just keeps coming down. When this rolled over, here's the daily chart. You can see this just was leading the market to the downside. So that is painting a very negative picture, in my opinion, of risk off. And let's take a look at oil, United States oil, see what it's doing. The oil's continued to drop down here. We had this congestion pattern forming sideways for weeks. Then we had this fake out here that looked like, it was trapping the bears. We're coming back up. I really thought if we closed above the midpoint, like 15 in here, I thought it was going to go the other way. Well, then, nope. It just reverses right back down and continues to come down this way. When you look at it on a weekly chart, you can see how negative this picture really looks. I mean, look at this 55-week moving average. I use Fibonacci numbers for my longer term: 233, 55, and 21. And the 10 exponential. So the 10, the 21, the 55, they're all hard down. I mean, this is going to take a tremendous amount of basing, whatever, to put in any kind of bottom right now, because it is in such a strong, solid downtrend. Gold, on the other hand, gold continues to come down. You can see on this daily chart. Let me go to a weekly chart. Now, here's what I think is happening with gold. I think we are in the final stages of a declining wedge pattern in here. I do believe we've had 1, 2, 3, 4th, that we're in a 5th wave down. I'm expecting it to kind of bottom down here, either at the, if you extend this line to the right, it kind of coincides with, this support line I've got drawn in here. And sometimes on wedges, they'll throw over a little bit, but that's what I'm kind of looking for. It may take a few more weeks or a couple of months to do it. And where have I got this support line coming in? It's coming from this previous high, coming straight across over here. That's what I've got. It's right around 100. So what is that? About probably maybe around 1,000 on gold. I'm not sure the exact conversion. I mean, it's usually fairly close, but I don't think it's an exact conversion. But anyway, this is the picture on GLD, which now, one thing I do want to point out, that it has been taking its time in these moves, and these moves have been big 3-wave moves like this, okay? And so, and even like this move down here, this was a big 3-wave move that had a 3-wave in it. So I haven't seen that big 3-wave, the third count, the counter trend and then coming down. So we could rally and do something like, something like this, and rally back and then come down, and come down into here. I mean, so that's a possibility also. You know, you just got to wait and see, because right now I'm not seeing that that classic, you know, this kind of move that, you know, that we have been seeing out of this out of GLD. All right, that's the picture on high yield, oil, gold, the stock market, S&P. We'll see how Monday trades. All right, everyone, have a great weekend. Talk to you next week.